Hey guys, this is Rudy for Best Investor coming at you live from a place called Mangonia Park in Palm Beach in Florida. Yeah, I'm actually sitting in my warehouse here with this beautifully decorated white wall behind me. And I thought, you know what? I better check in because we're all going to die. The sky is falling. Everything's horrible. Our stocks are crashing. What the heck is going on? So, you know what? Who better to go to than the smart people and see what's in the news so that they can tell us what exactly is happening today. So I'm over here on my TD Ameritrade account. I clicked on news and here's the headline news. So stick with me for a few minutes. We work through this one quickly and we see if we can make heads or tails of what's actually happening here. The Dow falls. Obviously, this is the third day in a row, right? So today is Thursday. We've already seen it crash. Actually, today is the fourth day. I don't even remember. Did it go down on Monday? Maybe. Anyway, it's the third or fourth day in a row that stocks are just crashing. It's a massive sell off, right? Which means everyone who's watching me right now has probably sold all their stock already at a loss in order to just get out of the market because there's a massive sell off on the under in progress right now. So the Dow falls nearly 400 points as bond yields continue to skid. So let's just kind of look at this briefly. Okay, I'm not going to spend too much time here, so I won't be taking too long and taking up too much time, too much of your time. First time jobless claims show an unexpected rise. Okay, we're going to go into that one in just a minute. What are the major indexes doing? I think that's poor English. I think it's meant to be what are the major indices doing, but hey, you know what? I won't be a grammar Nazi. On Wednesday, stocks had edged higher. Of course, stocks had edged higher, but not if you had energy stocks. We just crashed, right? We're in a correction right now, which is ridiculous. Consumption is on the way up. Supply is somewhat depressed. The price is sky high in the $70 range per barrel for WTI. So that is completely ridiculous. But you know what? It's a market. Remember one time people asked JP Morgan, what is the market going to do tomorrow? And he said, it'll fluctuate. Anyway, that's what we're seeing. And that's what we're going through. What is driving the market? Okay, these are the smart people, not me, right? What is driving the market? US stock benchmarks were in retreat after the latest in a string of all-time highs, with a weaker tone on Thursday across global equities attributed in part, stick with me here, guys, because you know I'm the chief scientist for the World Health Organization, attributed in part to worries that the recovery from the COVID-19 pandemic, they misspelled pandemic, could be slowed by persistent supply bottlenecks and the spread of the Delta variant of the coronavirus that causes COVID-19. The Delta virus or variant of the coronavirus that causes COVID-19. So I don't know too much about this stuff, but here's an interesting little tweet. Delta variant symptoms. Doctors, not me, doctors, say that they're not seeing a loss of taste or smell like we all associate. That's all of us, guys. We all associate a loss of taste or smell with COVID. But we're seeing more runny noses and sore throats. It could get confusing in cold and flu season this fall. I'm just going to leave that there. I've said enough. You guys make your own decisions. Ahead of the bell, the government said jobless claims rose to 373,000. Economists had looked for claims to drop to 350,000. So that's another macro event, right? What's the difference there? About 23,000 on 350 is about 6%, 5-6%. So I think the economists should do a better job, man. I mean, they're guessing what the number is for jobless claims, and they're guessing poorly. You know, that would be like me guessing the price of Occidental Petroleum. And don't do that. A sharp drop in the yield on the 10-year Treasury note. Ooh, that's driving the market. A sharp drop in the yield on the 10-year Treasury note. You know what has less fundamentals underlying fundamentals than Treasury notes? Bitcoin. At least Treasury notes are issued with the full faith and confidence of the United States government. Bitcoin, on the other hand, is like, I hope I buy it and then You buy it for more than what I paid for it. Those are the fundamentals. Anyway, the 10-year yield remains down 3.4 basis points at 1.285% after dipping below 1.25%, its lowest since February. The fall in long-dated yields has significantly flattened the yield curve. All right, what does the Treasury rate yield curve look like? It looks kind of like that. The 10-year Treasury rate year to date. You know, it started off the year just under 1%, and then it kind of like flatlined here from about March. It's sort of over here. Hey, you know what? This doesn't look too different to almost any stock ticker symbol. It's like really tough if you make this the main point of, or one of the main points of your thesis to explain the sudden correction. By the way, corrections are not necessarily a bad thing. Corrections are actually a good thing. When the market gets too hot and it pulls back a little, it's okay. It's not a sell-off. There's no real such thing as a sell-off. I mean, it's not like all the mutual funds and ETF managers, fund managers have suddenly sold their stock. I mean, guys like us, retail investors, there may be a couple of us who've sold some stocks because you panicked. You shouldn't panic, man. Get the emotion out of it. There's nothing going on here. I'm really actually looking for the news to educate me in terms of what is actually the problem, what is the big problem. But I don't see it, you know. So I'm not going to read the whole article. It's boring. Oh, here's another little piece. This is really cool. 10-year Treasury yield plunging its lowest since February. Government debt is Wall Street's new meme asset, says an investor. Tokyo is under a state of emergency that will continue through the Olympics, underlying fears a COVID-19 surge will multiply during the games. Anyway, what I was actually trying to share with you is that that's the news. What is the news? Well, there's no news. Hey, you know what? If you have a macro thesis that can explain this little correction that we're in right now, please share it. If you don't, hang tight. You know, in a few weeks or so from today, you won't even remember this, right? So whatever you do, don't panic. Everything's going to be okay. This is Rudy for Best Investor signing off and saying thanks for watching. Bye.